Hello, everyone, and welcome to another episode of the VMC Inc. Financial News Network. I'm Victor Campos. So let's take a look at one of the key components of this hypothetical ETF portfolio. Now, one of the best pieces of advice that we can give you is to invest using ETFs, exchange traded funds, instead of trying to pick the right stock and making a mistake that way. You want to invest in ETFs, which are baskets of stocks. Well, there's thousands of ETFs out there, so how do you make the right decision? With research, of course, commentary, and opinions. But let me explain then one of the pieces of this ETF portfolio. So I've got this VMC Inc. Financial ETFs. I have 4 funds here: BND, VT, VTI, VYM. These are all Vanguard funds. We've got 1 share of each of these. These are their prices. We purchased 1 share at the beginning of the 2016 trading year. And you can see at the moment, after 1 day on the market, all of these funds have increased in value. Okay, well, 1 day on the stock market doesn't mean anything. How does this portfolio stack up in the longer term? Well, let's take a deep dive into our BND ETF. So I'm using TD Ameritrade. And you can use just about any other financial website to get this information, but I like the info that I get here on TDA. So just a very quick look here: Vanguard Bond Index Fund, including total bond markets. So this is basically a collection of U.S. bonds. Bonds are a very safe investment in the long term, and this one is a collection of bonds. So I'm going to go deeper into the data here. So let me select the deep detail. Okay, so we've got $80.82 per share, 1 day difference of 0.95 cents, and that is a 0.12% increase in value in 1 day. This is what the fund has done for the year. So it's in negative territory for a year. Don't pay too much attention to that for the moment. Don't let that red scare you. Let's look at other aspects of the fund. So Morningstar Style Box shows that this is an interim length fund with a high return. Risk average, return average. So we've got medium or average risk and average return for our investment. Some of the important key factors to look at: gross expense ratio. These funds cost money to make money. When you're serious about investing, you're going to see that the fees are one of the things that you really need to pay attention to. This fee here is one of the lowest you can find for this type of fund. I've seen funds that are in the 1% range, 1.5% range. That means they cost 1% of the value of the fund itself. So you're always chipping away little by little at your own money by owning funds that have a high expense ratio. This one is 0.07%. It's very low, but again, it costs money to make money. Okay, what else? At the moment, the 52-week range is in the low end. You might think, well, this fund from the red is not a good investment. Look how low it's valued. Well, market timing is not a concept you want to get into regarding what's the best time to buy, what's the best time to sell, what's the trick, what's the formula, what's the voodoo. Don't believe in market timing. You want to buy a fund and hold on to it for some amount of time, whatever your time horizon is, But I'm just saying, as of this recording, January 5th, 2016, this fund, which I highly recommend, is on one of its lowest values. Therefore, you can purchase more of these, and you know the mantra, buy low, sell high. So eventually, this fund will increase in value, and it will increase the value of your portfolio. So in terms of what is this fund made out of, this investment seeks the performance of a broad market-weighted bond index. The fund employs an indexing investment approach designed to track the performance of the Barclays U.S. Aggregate Float Adjust Index, etc., etc. Basically, it's a collection of bonds with a steady return of your investment. So let's see, the stock market is a long-term game, but in the past month it has returned a negative value, in the past 3 months a positive value, in the past 6 months a slight negative value, year to date in the last year 0.74 in 1 year. In 3 years, if you had invested, your investment increased 1.37%. If you held on to the fund 5 years, it increased nearly 3%. So a 3% return on a bank investment, if you put your money in the bank, you are not going to get 3%. You're not going to get 1.37%. Maybe if you're lucky, you're going to get a 0.8%. I know one of my banks is barely a 0.1%, and most of the banks out there are. So this is a great rate of return. If you had bought the fund in date of inception, which was 2007, it would be returning to you 4.5% of a value. So again, don't mind this one bad year of results. Think of it in the long term. Let's see over here. Let's jump over to the performance screen to see more detail. So growth of $10,000. If you had held on to this fund, if you invested $10,000 into this fund 5 years ago, the value would be over $11,500. Again, a bank is not going to give you that much of a return. In a year, it's still in positive territory. You start with 10,000, you might have 10,100. Again, invest $10,000 in any bank and you're going to be lucky to get back $100 from that investment. If you can hold off 3 years, that increased up more. 5 years, even longer, and the longer you hold it, the more the value increases. So in general, in 2011, this was a 7.92% return on your investment. 2012, 3.89. 2013 was not a good year, a negative return on the investment actually, but that is negated by the positives of the previous years if you held them at that point. And yes, 2013 was a bad year for this fund as well as the whole S&P 500. So everyone took a beating in 2013. 2014 came right back. Look at that, wiped out all those losses and even doubled the return. And then 2015 was a bad year. Now, still in positive territory, but not as much of a return as previous years. So I like the TD Ameritrade amount of analysis that it gives us. Let's see, ratings and risk. Average risk, average return, that's usually what you're going to get out of bonds. Bonds are kind of boring, but they're a steady source of income. What's in this portfolio? What am I buying if I invest in one share? So the cool thing about ETFs, you spend $80.82 as of the time of this video, and that gives you a piece of a variety of elements. If we were buying a fund of stocks, that would give you a piece of different companies. Bonds, here let's say we have about a 40% investment in government bonds, a 0.73% investment in municipal bonds, 32.72% in corporate bonds, 22.23% securitized, and 4% in cash and equivalents. So this is basically diversification don't put all your eggs in one basket. And so an ETF is a great way to diversify. If one particular element of the market goes down, it doesn't bring all your investment down. If convertible corporate bonds decrease, well, it's only a small portion. If corporate bonds increase or decrease 32%, let's say this sector tanks, you've still got 70% of the investments that could be okay. What's actually inside of them? Inside of the basket of funds, well, we've got Ginnie Mae jumbos, U.S. Treasury notes, lots of Treasury notes at different percentages, and these are just the top 10 holdings. You can go to look at the prospectus to see every single fund, every single item in this fund. But basically, diversification, that's one of the tenets of good investment. Finally, let's look at some charts. So here we've got a 1-year graph of how the value of the fund did. This is basically what we saw on the previous screen without the scary red color. So we can go in different points of the year. What was the fund worth? It's a downward trend for the past year. Well, that's not so good. But again, don't pay as much attention to this other important aspect of this particular fund. I'm going to look at the comparison events, show dividends. So dividends are more of a return on your investment. This is basically cash that the fund pays you simply for owning it. So you might have bought one share a year ago, but it's going to be paying you back dividends. Interest, in a sense. It's going to be paying you dividend on a regular basis. I love this fund because the regular basis is, if we look here on our first dividend event, this is the regular monthly dividend. Basically every month the fund pays you some amount. Here we've got a 17-cent regular monthly dividend. Then the following, a 16-cent dividend. And then another 16.5 cent, 15.9 cents, 16.6 cents, etc., etc. Even though the overall value of the fund is going down, they've managed to pay a pretty steady 16 cents or so every month. The very last distribution of the year was 17 cents. So, okay, if you've got one share, 17 cents isn't a whole bunch. But if you've invested $100, $500, $1,000, $10,000 in this fund, that's how you can increase the value in the long term. They also do capital gains distributions. So basically, it's more money in your pocket. A steady stream of money. That's what bonds are all about, basically. So you can look at all the charts yourself and make a decision on yourself just for fun. Let's take a look at it in the longer time horizon, because even 1 year is not really enough time for you to make decisions. You've got to be in the long run, in the long term on the stock market. Let's see, 3 years. So again, the value might have peaked at a certain point. Let's see, this was back in 2013. Its value was $84.11. So about $4 more than it's currently worth. Then there was the crash of 13, but it was still paying dividends. 16 cents, all of that adds up. 16 cents times $100, or times 100, that's $1.60. 16 cents times 1,000 shares, that's $16. Again, getting $16 from a bank month after month is not a realistic thing that happens anymore, especially with the interest rates so low. So let's look at it in 5 years. Again, all of these little D's are dividends. So a while ago, dividends were 20 cents. 20 cents. So the value of the dividend can decrease, can increase, but it's a steady source of income based on many economic factors, of course. So backing up again. The Vanguard Total Bond Market Index is one of the key components of the financial of our VMC Inc. Financial News Network ETF portfolio. On another video, we'll look at some of our other important funds and commentary about them. So leave a comment, question. We'll be happy to help you out. This has been Victor Campos for the VMC Inc. Financial News Network. See you.